With earnings season in full swing, we have one part of the market that's exceeding expectations, while we have another that's starting to disappoint at the wrong time. In this week's video, we'll cover both of those sectors along with the Federal Reserve's plans to help stimulate the economy through the rest of the year.
Last week, the Dow Jones was the only U.S. market that was negative, down about 0.2, while the NASDAQ was relatively flat, the S&P 500 was up 0.5%, and the Russell 2000 led the way up about 1.5%. Foreign markets and emerging market stocks were both positive as well, with foreign market stocks up a little over 1%, while emerging markets were up about 0.5%, and now emerging markets are up 7% for the year, while foreign markets are up over 12% year to date. Today we wanted to take a look at a chart of the S&P 500, and this chart actually goes back exactly 1 year from where we are today. And we wanted to take a look at the S&P 500 today in regards to the all-time highs, especially since fourth quarter earnings are just kicking off. The chart pattern here is known as an ascending triangle, and this is a bullish chart pattern setup. There are two blue lines on the chart, and the top blue line is the flat blue line, and that's at the all-time highs on the S&P 500, right around the 3,030 zone. There's also a blue line below that, which makes up the ascending part of this chart pattern. And what happens here is that there are a series of higher lows being put in, which means that buyers are stepping in back into the market sooner than they have been. So there are two important levels that we're looking at on this bullish chart pattern with the ascending triangle. And first, as I mentioned, the 3,030 level, which is the all-time high. And that's where the bulls are hoping that they can break above and continue on higher to end the year. But an equally important level is 2850, and that's the level on the bottom part of this chart that the bulls want to make sure is held. Because if we see the S&P 500 below that 2850 level, then this ascending triangle chart is basically gone, and that could be a bearish signal for the market to end the year. So it's very important here with the fourth quarter earnings season kicking off that there are solid results so that we can see this bullish chart pattern continue and hopefully break out to new all-time highs on the S&P 500.
Earnings season kicked off with the financial institutions beating expectations. 85% of banks reported higher EPS than expected, along with over 60% outpacing their revenue targets. Now, this is somewhat surprising due to the Federal Reserve cutting interest rates, but it's showing that financial institutions are continuing to find unique and different ways to generate revenue. On the other hand, retail earnings have been disappointing so far. And also, the Commerce Department just released the September sales numbers, and the economy only grew retail sales-wise 0.3%, only half of what it did in July and August. This led the IMF to revise their global growth numbers from 3.5% down to 3%. So if this is any indication that Americans are starting to trim their spending going into the most important time of the year, holiday season, we could be in for a rocky end of the year. And lastly, the Federal Reserve was back in the news last week as they were going over details in regards to how they're going to start stimulating the U.S. economy. And they're going to start to buy $60 billion worth of U.S. Treasuries starting October 15th and running in through the first quarter of 2020. This, combined with the previous two rate cuts, along with future rate cuts still remaining on the table, could be the stimulus that we need to push the market through 3030 and onto all-time highs.
Earnings season continues to heat up as we have 20% of the S&P 500 companies reporting this week.
Thanks for watching, and if you would like more content like this, check us out on YouTube and Facebook.